Welcome back. Now, South Africa's coal mining sector has remained resilient despite thermal coal prices dipping. The price of coal has slumped by nearly a quarter since the start of the year as trade wars, policy uncertainty and investment in renewable energy weigh on demand. Yet Afriforesight says the future holds both opportunities and challenges. And joining us to unpack the significant developments reshaping the industry's landscape is Vinesh Chetty, Afriforesight's head of research. Thank you so much for your time, Vinesh. So today we're specifically focusing on thermal coal. And actually, quite interestingly, when I go through the different coal miners on the JSE, they'll talk about different types of coal, metallurgical coal, and all of those kinds of coal. So just paint a picture of what type of coal thermal coal is and really its use case.
Sure thing. Thermal coal is the vast majority of the coal mined in South Africa, and it is mainly used in power stations.
Okay.
You can think of Eskom, you can think of other coal-fired utilities around the world. That's thermal coal's main use.
All right. Well, at the beginning of the intro, I spoke about prices, and really that's all that investors have been focusing on, because we did have quite a windfall for the miners a few years ago, which has obviously softened significantly. Talk to me about the level of pricing that we are seeing and really what is influencing those pricing dynamics right now.
The big change from 2022, when thermal coal was about $400 a ton, to today, when it's about $90 a ton, has been the decline in natural gas prices, particularly in Europe. European gas prices rose rapidly in 2022 after Russia invaded mainland Ukraine. Since then, gas prices have come down. That's pushed down on thermal coal. And in 2025, also the lower oil price has additionally pushed down on thermal coal prices.
Well, talk to me about that relationship between natural gas and coal. You talk about the fact that natural gas prices have declined. Is that a substitute? What's happening there?
Absolutely. So particularly in Europe, Asia and North America, there are many utilities who own coal-fired power stations as well as natural gas power stations. And because of the deregulated market that allows power stations or utilities to pick which stations to operate. So if natural gas prices rise rapidly, they could switch towards coal. If natural gas prices decline rapidly, they could switch away from coal towards natural gas.
All right. That actually is quite interesting. And I'm wondering, because obviously South Africa is one of the biggest exporters of thermal coal at this point, what then does the export market pool look like currently, as you're now talking about some of these countries moving to natural gas prices as a substitute for thermal coal?
The big market that's declined rapidly and probably going to continue going away would be in Europe.
Yes.
2022 was the odd year. In general, Europe's been using more renewables, more natural gas. We probably see South Africa sending less coal to Europe. But in India specifically, and broadly in developing Asia, we are still seeing new coal-fired power stations being built, and off a very small base, some power stations in Africa, also coal-fired.
So does that mean then, as much as we have these kind of diverging dynamics happening in these export markets, you talk about India still building coal stations, but then Europe being able to go to natural gas. Would you say that, the market is still very supportive of the supply that South African thermal coal miners are actually putting out?
It's certainly gotten difficult around these $90 per ton prices. It's not as good of a profit level as before, but we're not seeing it as bad as it was during COVID when prices dropped to $60 or below $60 a ton. Also, a large part of the revenue loss for coal miners is to do with lack of exports. We've seen Transnet port and rail issues which have bottlenecked exports. If we could remove those bottlenecks, even at these lower prices, it could result in increased export revenue.
I'll go back to Transnet in just a little bit, but would you say that the higher coal prices that we saw a couple of years ago was not a normal situation, and that actually the levels that we are seeing now are the more normalized, and actually this should kind of be the base?
It seems so. From what we see around this $90 a ton level, the coal miners in South Africa seem to be in a holding pattern. Not many new expansions, there are a handful, but for the most part, companies are probably going to mine out what they have. but it can still be manageable. We're not seeing significant cutbacks at these prices.
All right. We were talking about Transnet, and I know that has just seemed like a drag, a long slog to actually get Transnet to perform optimally. Looking at the performance of Transnet right now, what has come through? Are there improvements that are seen, or are we still really struggling a lot to get our thermal coal out of the country?
So let's start with the positivity. 2024, Transnet railed more coal to Richards Bay and South Africa than 2023, and South Africa exported more coal in 2024 than 2023. That said, we're still significantly below our peak, which was in about 2016 or 2017, and that's still tens of millions of tons that could be exported. So if they could get those volumes up, that's more revenue for South Africa, that's more revenue for miners.
Well, let us come back home and look at the domestic demand. And of course, with Eskom as the primary electricity generator user of thermal coal, how is that looking like?
Well, we unfortunately saw load shedding come back in 2025. Eskom has generally been trying to bring its power stations back online. The units that it lost at Medupi and Kusile. But it's worth remembering that longer term, Eskom is declining its coal-fired capacity. It's already started closing older power stations, and it's expected to continue doing that going forward. So while Eskom is still the single largest buyer of South African coal, we expect that use might peak around 2026 or 2027. After that, the closures could reduce Eskom's coal demand.
Yeah. And in terms of who actually supplies that thermal coal in South Africa, both for domestic use and for export use, would you say that we have enough players and that the pie is sufficient?
So it's certainly dominated by 5 big players. That said, we've seen the big internationals mostly leave. Glencore would be the last really internationally listed company.
Yeah.
And we have seen a new wave of smaller South African-owned and South African-listed coal miners that have been buying up assets as the bigger internationals have been leaving.
All right. So just lastly, as we close up this conversation, what are some of the biggest opportunities and maybe some of the biggest challenges that you are seeing for the outlook of coal and the general coal landscape going forward, at least in the short to medium term?
So the biggest risk I would feel remains the export logistics. But that can also turn into an opportunity. If we can export more coal, there is probably a market in India waiting to buy that coal. Additionally, with Sasol reducing or Sasol receiving less natural gas from Mozambique because of field decline, Sasol might use more thermal coal to produce a synthetic natural gas.
Okay.
And again, South Africa does also use thermal coal to produce synthetic fuels. So those would be the big opportunities. All
right. Well, thank you so much for your time and your insights on the coal landscape and outlook going forward. Vinesh, that was Vinesh Chetty, Head of Research at Afriforesight.